So welcome back, guys, to another lecture in our 2025 mentorship series. Today we are going to start looking at sessions I had said. We are going to be looking at each one of them in detail. Today we are going to be looking at the Asian session. So the Asian session, first of all, I want to pull your eyes to the new daily opening gap and the new weekly opening gap. So we have our major focus on them. So the new day opening gap or the new weekly opening gap is a gap that forms from the closure of the market at the closing bell after 4 and some minutes. It depends on how the day closes, and then to the open of the new day, which is 6 p.m. So from where the market closed at 4 or 4:45, 4:15 at sometimes to 6, there is a gap that forms in price. So that's what we call the new day opening gap. And then the new weekly opening gap forms on Monday. So from Friday closure to Sunday's open, that is the new weekly opening gap. So this is a major concept we have to look at because it first and foremost acts as a liquidity pool, and it's one of the strongest liquidity pools in the market. So, and as you know, liquidity drives the market. So you have to be looking at mainly the new day opening gap. Then it also acts as a PDRA, so you can be using it as a PDRA. You can drive quadrants into it and view the price action that's happening within it. So for the Asian session trading, first and foremost, starts at 7 p.m. So at 7 p.m, that's when you think of clicking the buy and sell buttons. So before 7 p.m, we are just step reading. We are looking at price and noticing what the market is doing. So first and foremost, we are looking at very, very simple points of emphasis. So we are looking at first and foremost the time. Our trading starts at 7 p.m. and we are looking at the new day opening gap. We are looking at minor buy side and sell side. We are looking at initial buy side and sell side, then plus the price action that you all know. So for Asian session, first and foremost, it opens at 6 p.m. So this is a 6 p.m. candle. As you can see, this candle closed at 4:59. At 4:59, this is a bearish candle, so its closure is right here. And then at 6, this black candle opens, and the open of the bearish candle is up. So this is the open. Now from this open to this close, that is a gap. As you can see, the market gapped up. So what did the market do after it opened up? So we have a low and we have another low before the closure. So this is minor sell side, and we have this high right here. This is in a minor buy side also. So the market drops down, taking out minor sell side, and then rallies higher, taking out the minor buy side. So I want you to note this. When the market drops, a move that drops lower, taking out minor buy side, and happens to support a move going back into the new day opening gap, the start of that move marks the initial buy side or initial sell side. So what do I mean? This move dropped lower, taking out this minor sell side, and then the market rallied back higher into our new day opening gap. So this is our new day opening gap extended in price. So the market dropped lower, taking out liquidity, and then moved back into the new day opening gap. So this low, this is our initial sell side for the Asian trading session. And then we have this minor buy side taken out by this move, and this high sponsors a move that drops back lower into the new day opening gap here. So this high is where we have our initial buy side at. And the initial buy side, if extended in price, this can work as a major support and resistance level. So I feel bad saying support and resistance, but it can act as support for the market in future price action. So the market tends to refer to it later in price. Now, if we are to look deeply into this, if I'm to put some drawings on the chart, add some lipstick. So we have our minor sell side right here. We have minor buy side. The market drops lower, taking out these lows. This move that drops lower and comes back into the new day opening gap. This is our initial sell side, as you can see here. And then we rally higher, taking out minor buy side at this high. Going into further prices, this high supports a move that drops back lower into the new day opening gap, giving us our initial buy side. And take note, this initial buy side and initial sell side will be denoted by a price that is printed before 7 p.m. So after 7 p.m., I'm not looking for initial buy side and initial sell side. Those are some of the rules. So you have to be noting down the things I say, because I'm not going to be typing everything on the chat. I can't be making notes for you. So what happens in this trading session? Remember, we said for us to execute, we are waiting for 7 p.m. That is our number one factor. Now 7 p.m. is right here. This is where we open up at 7 p.m. But before 7 p.m, during 6, we are tape reading. Now, for us to know where the market is going to, so have a move that goes higher, taking out buy side, and we drop. And basing on Caleb's model, we took out the sell side first. In the 2024 mentorship for ICT, his model is like, if we are to take, he speculates if we are to take out sell side, then a move will first happen to take out sell side liquidity, then we take out buy side, then come back for sell side. So if we are to drop lower, the market will likely first take out sell side. Now we take out minor sell side, and then we rally higher, then we drop. Now this new day opening gap, as I told you, it acts as a magnet towards price, and it can also act as a PDR. So it supported price. And if I'm to draw quadrants on this, so if I'm to draw quads on that, you can see, let me first remove this. You can see the market dropped lower into the 0.25 level. So this thing is non-random. So this is one of the main PDRs we have in the market. So the new day opening gap. Now we drop into the upper quadrant of this new day opening gap, and it pushes price higher. So this is to the tick. Now this is the amount of precision we are talking about. So if I'm to do it like that, so we drop into the upper quadrant, then it pushes price higher, taking out this initial buy side again, and then we have a fair value gap. Market drops down into that, and then finally inverses it, closing below this, giving us an order block or a change in state of delivery. So we drop lower, we inverse this. The market did not come back into this inversion fair value gap because there was an order block, or what you can call a breaker, and a change in state of delivery. So we just retest into the change in state of delivery, and then we push price lower going into this week. So I would like to call this, because this is a fractal, I wouldn't want to mark my breaker right here. I would want my breaker right here at this low, the bodies. So this is my breaker on the higher time frame. We have a week, so this is a discount week. Extend that in the future. You're going to have this breaker, the market drops lower, we close below that, we retest into the breaker, and then we push price lower, closing below this week and closing below consequent encroachment. So you can see this red line, this is half of the new day opening gap, and that is consequent encroachment of the new day opening gap. So we drop lower, attacking this initial sell side, but we do not reach that. Now 7 p.m. opens up. We are at consequent encroachment. We rally higher, coming back into this discount wick, lower quadrant, negative 0.75. We had hit that before 7 p.m. 7 p.m. opens up, we hit that again, leaving a volume imbalance that constitutes with the consequent encroachment. Now the market comes back into that, giving you a re-entry on the fair value gap. Now this is a market structure shift at this low or this low, so a market structure shift right here. We come back into the fair value gap here from this, actually this overlap from this to the volume imbalance. We come back into that, then we drop lower. What is our initial target? Our initial target is the initial sell side. We drop lower into that again. We continue, we push price back into the low of the newly opening gap, and it pushes price lower. So we continue just like that into sell side. Now if I'm to show you, if I'm to measure, if I am to use expansions, I'm having this move that takes out this buy side. I'm having a fib level that aligns with sell side, but mostly for the Asian session, I'm mainly looking at half of this move between the -1 standard deviation and the -1.5. Most of the times that's by the tick, it has to be hit. So half of this is my take profit. Now we drop lower going into that. So this is programmed, and I have various examples for that. Let me show you this. Look at another session, Asian session again. So we have the market opening at 6, we close at 4, we open at 6 p.m. we rally higher into minor buy side. So take note, we took out minor buy side first, we drop lower. So this coming back into the opening gap makes this initial buy side, then we drop lower, taking out minor sell side, giving us initial sell side. So we come back into the range, making this initial sell side, and we tap read. We have a fair value gap right here, closes above the new opening gap, then the market comes back lower into the consequent encroachment of this. We rally higher into this wick, then it pushes price lower. Now 7 p.m. opens up, we have this low taken out right here. We failed to reach initial sell side, but we took out buy side first, so note that, take note of that. I would mostly want to execute near the new opening gap, so I wouldn't want to track a move that is from far away from here, because I'm expecting the market to still come and take out this, but after we go above the new opening gap, I can firmly say that we are to continue higher. So we have these highs too small. This is buy side, this is buy side. If I'm to extend that into price, so this is buy side liquidity, just like that. So having a buy side right there. Now we have this sluggish price action, it is jagged, then we drop lower. This move that would have caused the breaker, you know, the execution I love most. So from this high, sorry, I must like to use the automated entry. So from this high to this low, any move that surpasses this low, I trail my optimal trade entry to it. So I have this, the market goes and closes above this, we do not come back into that till this move. Note how the bodies respect the 0.79, then we continue higher, we rally higher. We reach the bottom of the new day opening gap, a volume imbalance above the consequent encroachment. The market drops into consequent encroachment, giving you a fair value gap from the volume imbalance to the candle's low. This is a bullish fair value gap. We come back, we hit the consequent encroachment of this fair value gap, which is the top of the new day opening gap. Then we continue higher, continuing higher into future buy side. So if I'm to look at this, if I'm to have this range right there, given my expansions, using your expansions just like that, I'm looking for between 1.5 and 1. So this would be my take profit hit right there. Right there. So you do not need to have the whole of this. This would be your take profit, and that is fine. We go to another example. Oh my god, I'm tired. We go to another example. What do we have here? So we have we have the market opening up. Now here you can see the gap clearly. So this is the new day opening gap clearly. So open up at 6 right here. This candle will rally higher, going into attacking the minor buy side. So this move sponsors the move that comes back into the new day opening gap. This is our initial buy side. So we have the market giving us a fair value gap right here. Market drops low. We have this week. This is a discount week. Yeah, this is a discount week. We drop lower. We respect this week. The bodies respect that, and then we come back into this fair value gap. We drop lower, coming into the 7 p.m. open. We drop lower, consequent encroachment. We rally back higher into that, and we drop lower. So 7 p.m. I'm looking at volume imbalances mostly. I'm having a volume imbalance right there. If I'm to zoom in, note how the half of the volume imbalance was respected, and it supposes a move that drops lower. We have a fair value gap. You see the top of this week being respected. We drop lower and we close. The moment we close below, you see we have been respecting it. We have a body closure, so I know we are now continuing lower. We come back one more time into the half of the week, which is the consequent encroachment. So we drop lower, coming into the new day opening gap, which is a strong draw on liquidity. So however much the market rallied higher and higher before 7 p.m., this new day opening gap was acting as a magnet towards price. So we drop lower. What hadn't we attacked first? The minor sell side. So every minor sell side, I'm looking at that. We attack that lower, and then going into these lows, which are so smooth, giving me my sell side, and I'm having initial sell side. So note how these initial buy side and initial sell side are used later in the market. So we have being respected, we have a closure, the market comes back into it, and we go higher, coming closure, and then we respect that. So it is used as a support and resistance level further into price action. I think I'll end with this one as the last example. Sorry about that. So we have this, We have minor buy side, we have minor sell side. We have minor sell side attacked first, then minor buy side, we drop lower. We have a fair value gap right here with our new day opening gap. We drop lower using this initial sell side as a support level. We continue dropping lower into previous sell side right here. So I'm not interested into that. I'm not interested in that. This market has been underpriced. Like you see, we are dropping lower into the day. So I'm looking at this new day opening up as my on liquidity for 7 p.m. We open up at 7. Market rally is higher. Open up at 7, going above the initial sell side and coming back into this fair value gap right there. So we come at 7, the fair value gap pushes price lower, taking out this low, coming into this fair value gap. So in this fair value gap, I'm taking also this overlap right here, these two candles, this candle and this candle, the overlap. So this is a PDRA also, ICT said in the 2025 mentorship. We'll have the consequent encroachment of that fair value gap. And if I'm to measure this move, to that, I'll have half of the negative 1 and the negative 1.5 to the tick. So most times it can rally higher continuing, but to the tick you must actuate between negative 1 and negative 1.5. So we continue higher. I mark this as a reclaimed fair value gap because oh fuck, this is not a reclaimed fair value gap. I'm so sorry. I'm so sorry. So this has to be an inversion fair value gap right there. It's an inversion fair value gap. So we rally higher, we inverse that, then we come back into it respecting the constant encroachment, pushes price higher into initial buy side and half of the negative 1.5 and negative 1. So if I'm to put my fib onto that, yeah, so that is it. Thank you guys for watching. Have a blessed weekend. Thank you. Don't forget to drop a like and subscribe.